We're going to talk about bridging the financial divide. And to talk about this panel with me, I have three great speakers who come from very different backgrounds, all former, well, one currently global head of SME banking, CON, currently still at Standard Chartered Bank. But I also have Amelia Ng. Amelia, you were with Standard Chartered Bank and you decided to launch your own venture, Olea, and you can tell us a little bit about this. And we also have Emmanuel van der Geer, but I call you Manny, on the day-to-day basis. And you were also part of the bank, and you're now CEO of Labamu. So in this, in this context, it's a current context. My previous panel spoke about the divide between what's currently happening in the West and emerging countries, and specifically this part of the world. And obviously it has some implications in terms of the economies, but it has a huge impact for SMEs. And I'd like to talk about what you guys are doing in your current job in order to solve for some of the problems that SMEs have, which are access to finance, access to more liquidity, helping them grow, and what you're currently doing. And I love the fact that we have a big bank, but also two startups in two very different markets. And let's just keep it open as a conversation. But I'd love to learn more about what you're currently doing and some of the things that you are providing for your SMEs in order for them to be more successful. So maybe let's start with you, Siwan, if that's okay, and you can start with a little background and then tell us, about your current job and what you're doing.
Thank you. Hey, it's great to be here, right? So I'm running, can I hear me? Hello, can you hear me now? Yes, okay, great, yes. Hi, it's great to be here, right? So I think the topic links very hard to my heart, right? So I'm running the SME banking for Standard Chartered Bank. We are in 18 markets in Asia, Africa, Middle East. And what you mentioned just now is very universal to SMEs, right? So on one hand, SMEs actually contributes hugely to society, right? So according to some statistics, and they contribute almost 90%, 80 to 90% of employment, right? And they are also a big force for innovation. They are also a big force to support the global trade. But at the same time, it is challenging for them, right? To assess financing, liquidity, and for a few reasons. Number one is that I think in terms of the traditional banking, where we look at financial statement and we look at the collateral-based lending, and usually the challenge is that many SMEs, I think based on statistics, about less than 15% of the SMEs do have audited financials. And also at the same time, when it comes to collateral based assessment of risk and the credit assessment, it usually takes very long. And a lot of time, also these terms and conditions, how it works, doesn't fit into the scenario, right? For SMEs, the business is, they need the speed, they need the frequency, they need to be able to assess the financing at the time when they need it. So that is where I think the banks, together with our fintech partners, can play a big role to make it happen, right? So I think for us in Standard Chartered Bank, where we are really focusing on is to enhance or invest in our digital capabilities, and so to be able to link up to the alternative data that's available in the system, in the environment and the ecosystem, and also working with our digital fintech partners to see that, hey, use alternative ways to bring the financing and facilities closer to the SMEs and plug into the scenario, the transaction scenario, the trade scenarios to make it happen. Yeah. Maybe I pause there.
Why don't you pause here? But I think you said, okay, let's see, shoot. I think you said some of the things that that are important, right? Which is SMEs need to focus on business. I think that's, you know, what it's a matter of survival for them. But at the same time, on the other side, you've got the banks who are actually looking for validated information on which they can make decisions and provide, you know, some credit, some working capital, and all of the liquidity that they need in order for them to be successful. So maybe Amelia, or well, why don't we start with Amelia? But what are some of the things that you can do in order to help with the digitization of that ecosystem?
Yeah, so I started off with Olea. Actually, is precisely because we see the gap that today a lot of, I mean, not only SME, we've been talking about SME, in fact, SME and mid-corps are getting more difficult to access trade finance. So Olea is actually building a digital ecosystem that can connect different funders. It could be banks, but we work heavily also with private credits, multi-asset investors, because these are the investors that have very different risk appetite versus a bank. Our disruption to the market is to bring two things. Number one, we use technology to massively drive down the cost to serve. I'm talking about operational cost to serve, meaning that, for example, today if I do a KYC, a bank-like KYC, 1-2 hours, complete digitally. And then the second type of disruption we bring is the cost of capital. Like, as I said, bank, because of their own risk appetite, because of regulatory constraint, tend to actually shy away from the smaller SME. Whereas for a lot of the capital market investors, it could be insurance company, and then it also could be mutual funds, pension funds. These are the guys that actually have very different risk appetite. We build an ecosystem so that we can work with banks. We can also work with non-banks. So we can work with banks to serve their clients better, but in terms of the risk appetite that they don't want to take, we can actually distribute. And we work with banks so that they can leverage our technology to reduce the cost to serve, right? To increase the speed that they can serve. So by combining the, well, put it simply, lower cost to serve and lower cost of capital, then you will be able to actually be able to serve the underserved community more effectively. In fact, Sharon and me we have been great partners in this journey.
Well, great to hear. So digital as a tool that enables your SMEs to get a quicker access to global financing, and at the same time matching some of those global firms with a risk appetite that, you know, fits with what they can do and what they want to do is what you're providing. How about you, Manny? What are you doing? And what are some of you're specifically in Indonesia, right, which is a complicated market, very diverse. And so what kind of SMEs do you see, and what are some of the needs that they have?
Yeah, so you know, similarly, Labamu was constructed to close the gap between SMEs and financial institutions. We entered into Indonesia as our beachhead market. It's a massive market, 63.5 million SMEs, 90% of all companies, 60% of GDP, so a very, very big market. But out of those 63.5 million SMEs, 80% are micro businesses. And micro businesses are defined by, you know, 500 million IDR turnover per annum. That's 50,000 C. And so there are a couple of issues that pop up dealing with that community and even further up the scale with larger scale SMEs that are there. The first one is, I think Geer called it out before, which is assessing creditworthiness or the asymmetry in information. This is compounded by many of these businesses, even some that are quite significant businesses, being run fairly informally. This is where people do things like mix their personal banking with their corporate banking. It makes credit assessment very difficult. I think the other aspect, which you also touched on, was the cost of deploying capital, the cost of running a loan process, where a lot of the ticket sizes that these guys are after are you know, sub $10,000. And so the whole process of underwriting, distribution, loan management becomes prohibitively expensive. And so what do we do? So we have built a platform called Labamu that provides operating capabilities to SMEs beneath the surface, we volatilize that platform with a full bank account. What that enables us to do is to, one, formalize the corporate banking aspect away from the personal banking aspect, gain a lot of insight into how successful or otherwise the business is in terms of what they're selling, how much inventory they have, who they're selling to, the cost of goods sold, as well as access to the full bank account, which makes underwriting a fairly simple process at the end of the day. But it hits on the same sort of themes as we discussed before, around lowering the barriers between SMEs and financiers, and industrialising and lowering the cost of financial services deployed to that community.
Great. Well, a lot of it talks about technology, and maybe we can go a little bit deeper into the technology. In the previous panel, we spoke about AI, so artificial intelligence. But how is AI incorporated in some of the things that you do? Maybe to your point, for credit scoring, for fraud detection, for these kind of things. So is this something that you are currently embedding?
We do use AI, but in very different ways. So we use AI for some KYC processes. The other thing that we do, so we have a few client commitments that we have. So we provide our clients more opportunities to sell. We make the sales process more efficient. We provide seamless access to financial services. And one of the ways that we do that is by providing our clients methodologies or tooling to market their own products and services. And we actually use AI in that process to copyright their messaging for them. But from a credit standpoint, we actually don't underwrite loans ourselves. We integrate with financiers and credit providers.
How about you?
I just give an example. Today, actually, Olea leverage generative AI to actually check documents. So if you guys actually are familiar with trade finance, well, there are a set of documents you need to check, right? Be it actually 10,500 transactions or 5 million transactions. Therefore, for banks, if you do it manually or you heavily relying on people to check the documents, you tend to want to deal with the invoice as 5 million in value, rather than a $500 invoice. Because we deploy using AI as an example, actually to us the marginal cost to serve are the same, which is quite low. We process 1 billion financing a month. I mean, overall, Olea only have one ops person, and we don't expect we will need that until we have 10 times full of extra ops person. We don't rely 100% on AI. Everything AI generate, we have a human decision maker. So we still not entirely push it 100%. It's, I would say 90%, and then you have a human to make sure that everything's actually work. But that efficiency has helped us a lot to reduce the operating cost to serve.
And maybe you, from a bank perspective, what are some of the tools that you're using in order to bridge that financial gap, I guess?
And we used to talk about ABCD, right? So AI, blockchain, and cloud, and data, right? So if I were to look at where we use the most, I think two things. One, of course, is, as you mentioned, credit scoring, right? So we have to, may not be ChatGPT, however, is certainly machine learning, right? So we need to use good data to produce good credit scoring, and that needs to react very fast. I give you an example where in China, now we partner with 2 digital banks to support SMEs. I think so far we have supported 30,000 SMEs with now overall asset book close to, it's actually $350 million. And we initially, when we started work with the partner, this is very difficult for us, right? So we need to really improve our technology because every credit decision is required to be done within 10 seconds, right? So without technology, without being able to processing those data and use a good predictive model to do that is not possible. So I would call that machine learning, that part of AI. And the second piece actually is very, very critical for us, which we have invested a lot in the past number of years, is data. So because the traditional data we use from the credit bureau has very limited coverage of SMEs. So when you actually use those data to go do the credit decision for SMEs, you find that very difficult, and then lots of SME will not be qualified. So what we have done, we look for alternative data, and one example is in Vietnam, right? So in Vietnam, we have signed up with a partner, MISA. So they are a ERP provider, and they are having in possession of huge supply chain data, the invoices data in between buyer and seller. So we are able to use those data to give a credit decision to an SME in Vietnam, an emerging market, you can imagine, in 30 seconds on approval and the line assignment, right? So I think that's model works very well, and we are actually, I think in the market, we are really leading in innovation, and we have now signed up another 2 partners, right, to really scale that business.
Well, I think providing a decision in 30 seconds is amazing. So kudos on that. If we stick to that ABCD model, how do you apply it, in your businesses? I think in the big bank business, I get it. How do you incorporate it in your business? Maybe start with you, Emmanuel.
I draw 2 examples, right? Olea issued the first trade receivable token about a month ago. The token was issued for a private chain. However, underneath that is actually quite important is actually the data link with the actual private chain. So Olea has our own DLT ledger. At the moment, we don't actually provide our ledger to external party, but we do actually exchange data to different tokenization engine. There's also the data that is stored to actually drive the securitization engine as well. So by leveraging the sort of data that we generate from each of the transactions from the documents, we are able to allow our funders to have the full transparency of what types of supply chain asset they are actually investing into. And if they check onto our portal, they have 24/7 sort of monitoring to the point that, okay, where is the good today, right? The goods can be shipping from China to US, where exactly it is, because today the technology, if you put in the Marine Tower database, you know exactly which ship, because the shipping document has that information, then you actually know where's the goods, right? Trade finance is actually 3 types of flow: document flow, trade flow, and money flow. So using that sort of data, you actually completely link the 3 flows efficiently. You can then actually, on an asset basis, you can do the very traditional way of selling the asset to your funder in a legal documentation, very traditional way. Or you want to securitize it, you can actually slightly more advanced, not a lot of banks do securitization of trade asset. Then further, you can do a tokenization, all ultimately based on the same set of data.
I mean, this is super interesting. I'd like to get back on the tokenization piece, because that's one of the use case that we do at SC Ventures. So I'd love to delve a little bit deeper into that. But first of all, before we go there, how about you on the, if we stick to the ABCD framework as Sian-Wan was describing it, cloud,
that's a comment
data.
on DLT.
Yeah,
so,
but let's go to DLT afterwards. But cloud, data.
So in terms of cloud adoption, we're fully cloud adopted. I mean, for us, SaaS based on cloud is key to lowering the cost of distribution, lowering the cost of our services, making them more available and more effective. Today we operate, across both the Singapore region on AWS as well as Indonesia, which gives us a huge amount of resilience. There is quite a lot of education to do in the market, particularly in emerging markets, around cloud adoption, primarily because often network access can be intermittent at best. And so that's where you need to look at resilient network connectivity if you're going to use cloud softwares, particularly in emerging markets, or have some form of offline capability, which honestly to date we shied away from.
So going back to the tokenization, you mentioned that you recently tokenized some trade assets. Can you tell us more about that? And what are some of the benefits that you've seen in tokenizing these trade assets?
So first of all, I guess for our area, supply chain assets, for tokenizations have various benefits. I would say category one of the benefit will be actually it is smoothen the entire exchange of the asset. You can say fractionalization. You can actually also say actually the reason why investors generally are crazy about tokenizing real world asset is because people from banking industry will know financial services industry using a lot of this asset. They can actually put it in margins. They can actually do a margin lending based on the asset. So there's a whole lot of benefit in terms of cost efficiency, in terms of transparency you can bring into that asset class. So I think given that trade finance asset is rather opaque, it's very, very short tenor, sometimes 30 days. So there's sort of real-time data and insight that you need to know into the asset is much more acute than you have a 2-year bonds, right? You can read documents for a 2-year bonds, you cannot for a trade finance. So it's a natural benefit of this sort of category one, increasing efficiency of the whole flow of the asset. The second one is that what we are trying to do right now is that there's a whole new liquidity pools in the stablecoins environment, right? So in the first token that we issue are traditional. The investor is an FI, is a bank, right? So it's a traditional liquidity. But we are looking into the non-traditional liquidity, which is stablecoin funds. We are discussing with a few of them. Actually, that sort of tokenizations, once we launch, there are people that are coming into us. Actually, technology is not the major issues, because everyone have technology, they want to work with us. Actually, the people that have the real asset is actually the investor are looking for. So for us, it's generally again, two themes. I mean, it's pretty much similar. Is number one is how do you reduce frictions of providing this asset to your investors? I think tokenizations solve a lot of the problem. Second part is we really want to actually drive the different liquidity, because one way of is a different liquidity would have different risk appetite, they require different things, which is actually very much in the theme of we exploring pushing the boundary of the investors towards this asset class.
Yeah, and increasing distribution, right? So,
yeah,
so
definitely.
outside of your initial ecosystem.
Yeah.
You wanted to come in?
Probably I give two more examples, right? So I think one of examples Amelia and I worked on in our previous roles, and is working with a fintech and to use blockchain, right? So they are link lodgers, right? So we work on a deep tiered supply chain financing, and I think in one of the programs we did, and that financing reached to the third tier of the supply chain. So it's a very, very deep supply chain. Through this blockchain technology, it is the way where you can transfer in a way that you tokenize the credit of the anchor and pass it down through all the way to the supply chain. So benefited the lowest level, a tier of the suppliers, which usually for them to get in financing is very difficult. So that actually use the technology, it become possible. And then the second example I give is a recent example. It's not in our bank, but we are looking at that technology as well. If you look at the GBA area, right? So it's one country, two systems, right? So where you have a lot of companies where they have the operations in factories in Shenzhen, right? But then they have a sales center and a procurement center in Hong Kong, right? So how do you do the credit assessment of those type of companies where that sales number and the operations are sitting cross-border? And then people have enabled the technology, use blockchain, right, to enable the credit assessment, passing through the data in a secure way, but at the same time, in a way that you don't have to review the details of the confidentiality of information, sensitive information, but at the same time, the data can be used. So I think there is a terminology for that. So data is usable, even though it's not visible, right? So that's through the blockchain technology. I think that's is a great way to enable this cross-border trade and cross-border trade financing. Yeah.
Yeah, because I think you mentioned, obviously you mentioned, Hong Kong and GBA.
Yes.
But I think it's Hong Kong, GBA, and now,
And now,
plus one,
yeah.
plus two, right?
Exactly,
so I think,
exactly.
Expanding to Vietnam, to Thailand, etc.
Yes.
Right, and so technology enables you now to track a lot better, all the way
Exactly.
down.
Yeah, it also in many ways that you still have the data protection, right? But at the same time, you're able to use that in a secure way to be able to do the credit assessment. Yeah.
Manny, you wanted to comment on DLT?
Oh.
Yeah.
So not that we do any of it, we've looked at it, particularly in terms of book and risk participation, much similar to what Amelia was talking about. But you're correct, in terms of supply chain traceability of goods, it's a really good thing to ensure authenticity both of trade, but also how moral, I guess, the source of goods is. So fair trade and those sorts of supply chains is interesting.
And I guess as you are enabling all these technologies, how much do big financial institutions care about the traceability? I think maybe you can talk a little bit about Standard Chartered, but I think Amelia, I'd really love to hear, because you didn't talk much about your funders, but you recently raised over $1 billion in funding for SMEs in this part of the world. How much do they care about all this technology?
We actually, as of today, in our database, we assess around 200 global investors across the world. There's 20 active all the time, and you're right, 1 billion, we can call any time $1 billion or more. Investors are looking for the benefit that technology gives you. They will not tell you what they want from technology because they can't. But fundamentally, they need a trusted partner, meaning, okay, if you're essentially, they do all sort of due diligence, I can tell you, right? You think your technology is great, okay, they get a third party, sort of auditor to check your technology, check your data, ask all sort of random sort of report that generate within 24 hours to test that you do have the capabilities. So they do actually care, but they care about I would say, your trustworthiness of your systems and the technology. So in order for them to protect the ultimate investors, it is extremely high standard. Majority of our funder takes the longest one actually is 18 months to do due diligence on us, in order for them to be comfortable in terms of the process we are following, in terms of the technologies we are following. So I would say they care, but they won't talk to you about technology. They don't care about the ultimate, what is the benefit your technology is giving to your platform.
How about you, Sewan?
Yeah, I think traceability is, I think one of the area we discuss a lot, we look at one area is the sustainability financing, right? So, and if you look at it, it's like there's a lot of the big anchors, big buyers, they actually put on a lot of requirement from the sustainability point of view, right? And then in that area, and that actually raised a bar, right? We already said the SME it's difficult for SME to access financing. And now there's this additional requirement, right? Is to be able to meet a lot of sustainability requirement, be able to trace, making sure that I be able to prove my carbon footprints, right? So I think that's where the technology, blockchain, and can help a lot to help us to trace, to enable the traceability of the source and overall the supply chain and track the carbon footprints. And that is also making the sustainable financing a lot of inclusive for SMEs, but also in a way that also help the SMEs to continue to stay in the supply chain of the big buyers. We've seen, I know Singapore government has lead some of the investment into that, and you will see big news coming. I will not lead that, but we are part of the experiment and to support it. I think is means a lot to SMEs. Yeah.
Maybe Manny on the sustainability. I think we bring a few factors on the table. Sustainability. We talk about blockchain. You're dealing with, deep tier MSMEs in Indonesia. I know on your platform you do a little bit of education, but at the same time you want these SMEs to keep on doing business, right? Because that's what they should focus on. So how much education do you need to do? How much it is easy to do now on platforms? Yeah.
Can I take on the sustainability first? I'll come to that in a second, because we do quite a lot of education. But very at the early stage of development, we did quite a lot of work, particularly focused on the plastics recycling segment. We had quite a large MNC client that was procuring from mid or low tier SMEs, and we started to support that supply chain. And we took a very close look at how we might be able to count and monetize actually plastic credits. So we did quite a lot of work on that. Where we got stumped actually was there was a lack of industry standardization about what constituted a plastic credit and how to measure it. But there certainly is value that you can extract from rewarding ESG or I guess environmentally compliant industries and businesses and supply chains from doing the right thing. And so I think there's definitely an opportunity there. On SME, on micro business education, we've done quite a lot of it. We used to do one, I think every day, every week, for a period of time. Like the number of SMEs that we'd educated in basic business practice is in the several thousand. We're now looking at reconverting that into more online training, just because we're at a scale point now where doing it physically lacks meaning, because we just can't reach enough people. And so we are looking at sort of digitizing that process. We've also been working with some of our partners on education. So Irene has been helping us in some cases with Lift Women on female-led education for female entrepreneurs. And there's a lot of work to do. I think the education bar, particularly in the areas of business practices, is quite low. One thing that I was really surprised by is it's not just the general educational level. So 70% of university graduates in Indonesia become entrepreneurs not by choice, because there's no jobs for them to go into in corporate life. Yet they might have done a science degree or a mathematics degree or an arts degree, even a commerce degree. They don't know the basic practices of running a business day to day, and they need to be educated to do that. And so I think there's a huge opportunity there.
What are some of the other strategies that I guess you guys employ in order to get your SMEs up to date on what financial institutions are looking for and the benefits of providing this information? I guess maybe Emmanuel.
Yeah, I can go first. I think if you, I think there's a lot of study to see what the SMEs they're looking for, so support on, right? Of course, one we talk about in lands about that financing, accessing to financing, right? So the second one is really training, upskilling, right? So we have been partner with various institutions to see that. I think Irene, we were working on SE Wing program, but this program is particular support looking at women entrepreneurs to see how do we support them. So we're looking at working together to create a community so they can support each other for ideas, mentorship. At the same time, we're looking at partner with institutions to provide professional trainings. By the way, actually by survey, AI, technology, how do they use technology data to enable the business, to create access to more markets, to create the efficiency for running the business has been a key topic. So we could actually think about it to partner together with SE Venture to provide those kind of trainings to entrepreneurs, which is something they're very, very interested in.
I actually really personally really think that this is something that we all should actually work harder, particularly in terms of women enterprise. Statistically, as Xiaowen said, right, women enterprise generally already has one level of hurdles versus the male one related to getting financing in general. It's because generally, if you think about a household in a lot of emerging market, bank require collateral, and a lot of, say for example, the properties are actually in the ownership of the man, right? So this is one level. Not to mention trade finance, because when you do cross-border trade finance, you actually have a different network, and all those networks generally tend to be men, so women don't generally talk to them. There's a whole lot of international standard laws and regulations that they will not know, right? I generally think that we've spoken to quite a lot of investors. There are appetites in the market to do good. So the difficulties then is how do you identify the woman enterprise or the right enterprise you need to support, and that's I personally think that is a holy grail. I mean, I have investors coming to me and say, tell me if you can identify meaningfully women enterprise, I can lower my return hurdle, right, in order to support that. But even then, I find it difficult to actually gather the sort of asset for them.
And to verify that information.
Correct.
Right? Because because everything is digital, right? So.
Yeah.
So that's why I seriously think that there's something we can actually work together.
Yeah, I think that's great, because maybe I could talk a little bit more in this area. We have launched a program called SC Wing, right? So it stands for Standard Chartered Women International Network, right? So this is really targeting at empower the women entrepreneurs from a few pillars. The key proposition is number one, to enable their access to financing, right? So we have specific credit programs designed for them so that they can access to simple credit loans, as well as some trade financing loans. But also at the same time, we actually were looking at pool all the resources in the bank together. So we have SC Foundation, right? So we have programs in SC Venture. We also have partners. And we have Olea, who can actually help us to assess different type of financing, right? So we're looking at put that together to create that continuum, financing support to women entrepreneurs. That's on financing. The second pillar is around upscaling, right? So working together was programs who design trainings, right? Like how to run business, how to put together a proposal together, how if you were to seek for funding, how do you put the business case together? As those actually the programs, training programs, and those programs, what we do, we actually each individual, because it's also involved in languages and so on, we work with the local partners, provide those training. And the third pillar is about creating the community. Right, so we work with Irene. We're also working with, I shouldn't review too much. We're working on some exciting platform where we'll put all this information together, and where the women entrepreneurs in our markets where the programs is available, they can access that platform to be able to seek for support from each other and be able to access supply chains information, and also be able to get the mentors and form the mentor-mentee relationship if they want to bounce the idea with someone, right? So lots of things are coming in that space. Certainly want to work together with Olea a lot more and the other ventures within SC Ventures, right, to create that ecosystem to support the women entrepreneurs.
Yeah. And you and we did a program earlier this year, the Women in Entrepreneurship program, to promote entrepreneurship for women in Singapore, right? So I think, but I think it's specifically in our markets, I think, and you can talk a little bit about what you're doing in Indonesia, but I think we see a lot of women, actually entrepreneurship, and maybe we can finish just that topic with what you're seeing with Labamu.
Yeah, so just to reinforce, I think what Amelia said, access to collateral is a big issue for women entrepreneurs and women business owners, particularly in emerging markets. In Indonesia, the vast majority of micro businesses, as it is the case with Cambodia and other markets in Asia, run and I guess in principle owned by female entrepreneurs. So there is a big task there to promote them, to support them, to find ways of helping those businesses grow. In Indonesia, we work with two female entrepreneurial communities. One is called Sisters Net, which is actually sponsored by Excel, and there's another one called New Printers. And so these are great sort of organisations to engage with. They do a lot on educational rollout, a lot on supporting programs to help women start and run and grow their own business.
Maybe we can just finish with regulators. So I think, Sian, you mentioned briefly what MAS is doing. I don't want to talk about U.S. elections because I think that's just a wrong topic to talk about right now. But actually, what are the West investors looking for when they invest in some of our regions, and what can some of the regulators like MAS do, and what are they actively doing in order to comply with specific frameworks and guarantee the assets and guarantee the SMEs and these kind of things. So what are you seeing? What are some of the upcoming markets as well, some of the upcoming regulators where you see a lot of innovative things happening?
I can start first. I think the regulators in our region, I've seen lots of them actually in general, they're very, very supportive SMEs, right? So I think they're coming from a few supports. One, actually many, and coming was really financial support, right? They rolled out guarantee programs, right? So we see that here in Singapore, especially during COVID, right? So we're seeing that in Malaysia, we're seeing that in Hong Kong, right? So, and in most of our markets, actually regulators, they're willing to put together the financial support to say, hey, I guarantee, and then let financial institutions to go out to support SMEs. And also a second big support coming from the regulator is around providing that, the data transparency, right? Because we talk about the information asymmetry is really the key challenge for SMEs to access credit. So a lot of the government, I see them at that coming to see that, hey, I want to set up a good data infrastructure for the financial institutions to be able to access data, right? So
would we ever see Singapore share core pass information with ASEAN countries, for example, or?
I think, first of all, making the local information available, that's also critical. I think if I were to cry here, I would see that, hey, Singapore needs to put together a commercial credit bureau, right? So today we still only have a consumer credit bureau. We don't have a formal commercial credit bureau where the banks could share the information on the credit exposures the company has, right? So that it will really help us to speed up the credit assessment with those information. But I do see some very good efforts, like we mentioned about Vietnam. We talk about this MISA ERP, the supply chain information. In fact, that is government commissioned, right? Government actually authorized some four ERP providers to actually digitize the whole invoice process. So because when all the invoices are digitized, right, so that information become so good, easily accessible by the bank, by the financial institutions to use that to provide credit and make credit decisions for the SMEs. And we see that I think Malaysia is also moving forward on that, which is very good, very welcomed the approach. And then I think the third area many regulators attempt to do is to incentivize the banks and financial institutions to provide finance to SMEs, right? Either in form of capital reliefs or in form of the cost of funding cost reliefs, which are very good as well. I think the banks actually needs to be incentivized. I think it's more for making sure that it's just as a way to show the support, to see that, hey, we do want to support SMEs because they're so important to the society and they provide that important employment to our young people, right? So I think that's a good way to support as well.
I think there's no doubt about there is a genuine sort of intentions. I think, Carol, when you mentioned about regulators, you generally meaning regulators and government. And I think there's quite a lot of initiative. For me personally, if we do want to actually promote even more sort of cross-border trade for SME, I think the synchronization in terms of initiative and policy and regulations is actually one thing that is important. What I actually see in general, because of the different situation right now, there is a general fragmentation in regulatory framework around a lot of key issues like data, privacy. Generally, are moving to the right directions. It's just the pace and also the approach. There's general difference, and the differences will then create one level of complexity when you talk about global trade. So I think this is, again, something you can see it as an opportunity, something that you can see it as an obstacle for our types of platform that particularly looking into cross-border trade. Our system are geared towards sort of setting up framework of different legal systems, which provide us a bit of a unique competitive advantage. But in the end, if you think about it, then it will be meaning there's a little bit of a barrier if you have a domestic sort of supply chain platform want to do more, then you become a bit more difficult. So there's a pros and cons of the current situation, I would say.
In Indonesia,
Yeah.
are we going to see a robust regulatory framework?
So in Indonesia, they, I mean, obviously they undertake some protective or protectionist policies to protect local businesses. They're very focused on being able to support export rather than import. They do have specialised lending products for SMEs, core loans as an example, that incorporate lower interest rates and government guarantees. I think the challenge is that there's a barrier to entry. Not many, if any, SMEs qualify for those special loans. But the government's very intent on supporting the SME segment. It's a huge contributor to society in general and GDP. And we do a lot of work with municipal governments to support SMEs. Most recently, with the municipal government of Tangerang to support exporters. And so we're doing some prototyping with food manufacturer exporters from Indonesia to Singapore currently, which is a really sort of almost like a CSR thing to do, but it's a very rewarding activity, and there is a huge opportunity for those merchants and the government is doing a lot of work on trying to lower the barriers around export, particularly on doc prep and financing solutions to merchants in Indonesia.
I think we have probably 2-3 minutes for questions for the audience, if there is any questions for our panelists. No questions? Well, with that, I want to thank all three of you, Ziwen, Amelia, and Manny, for this panel. And if you want to connect with them, we can do a little bit of a networking session right after. But again, thank you very much.
Thank you. Thank you.